I'm Jane King at the NASDAQ market site. A grocery giant snaps up a smaller rival and the stock soars.
I'm Patricia Wu with the NASDAQ. Equity bank shares selling equity. It started trading today under the ticker EQBK. I'll sit down with the CEO to talk growth strategy.
I'm Remy Blair in San Francisco. Robots won't be stocking store shelves this holiday season, but are we one step closer? And find out why Horizon Pharma is bleeding in midweek trade.
Welcome to Small Cap Nation. I'm Jane King at the NASDAQ market site in Times Square. Kroger announced plans today to buy Roundy's grocery chain for about $800 million. Kroger said it would pay $3.60 a share for Roundy's. That is a 65% premium over the closing price of $2.19 a share on Tuesday. Both board of directors have already approved the proposed merger. Roundy's operates as Roundy's, as well as Mariano's Grocery and Pick and Save in various cities. Well, Ethan Allen, CEO, is in the fight of his life. Farouk Kathwari is enduring criticism of his ability to run the furniture maker and retailer. Now, Kathwari, one of the latest CEOs to come under fire from activist investors, faces claims that he is out of touch with retailing trends and needs a more assertive board to guide him. Sandel Asset Management, an activist investment firm, has amassed a 5.5% stake in Ethan Allen and is seeking to elect 6 new directors to its board at the annual meeting, November 24th. Sandel hasn't said whether it would oust Kathwari, but has proposed to sell some of Ethan Allen's real estate, broaden the product line, and boost the company's meager online sales, among other things. Meanwhile, JCPenney's stock soared after sales beat expectations and a lawsuit was settled. The settlement was related to a class action lawsuit alleging false advertising. The lawsuit was filed in 2012. It alleges JCPenney's practices surrounding price comparison advertising of private and exclusive branded products did not comply with California law. Well, lots of small cap companies making news and earnings in other ways today. So here's a rundown. Horizon Pharma says Express Scripts is cutting it off as a supplier. Anavex confirms its Alzheimer's drug tested well in early studies. Alarm.com beat earnings estimates. Amira Nature says an independent review saw no wrongdoing in its accounting. AmTrust Financial plans a 5 million share offering. Arena Pharmaceuticals saw third quarter revenue top estimates. Boot Barn cut its yearly outlook. Alexis saw positive early results in its melanoma drug. Flowtech was cut to $5 a share at Iberia. Gulf Resources says it will reincorporate in Nevada. Hackett Group sees earnings above estimates. Inogen earnings met expectations. Lumentum beat estimates. Media General's board is said to be near endorsing a merger with Nexstar Broadcasting. And Opower's loss was narrower than what was expected. Well, Zebra Imaging, a developer of 3D holographic technology, has acquired Rattan software. Rattan, which was founded in 2012, develops image visualization software. It will continue to operate as its own brand under Zebra Imaging. Financial terms of the deal were not disclosed. Zebra was founded in 1996 and employed 20 workers last year. The company was initially launched for the automobile industry and was partially seed funded by Ford. And Skyworks Solutions announced a $400 million stock repurchase plan. The new program replaces a $300 million share buyback plan that had 62.6 million remaining. The analog semiconductor manufacturer is releasing all of this information today. Skyworks is in a battle with Microsemi to acquire competitor PMC Sierra. A big day for equity bank shares. A Midwest bank debuted here at the NASDAQ today. The Kansas-based company plans to raise $41 million by offering 1.8 million shares at a price range of $22 to $24. Patricia Wu sits down with Equity Bank Shares CEO Brad Elliott.
That's right, Jane. Equity bank shares started trading at 10.50 this morning. It opened at 24.25 under the ticker EQBK. I'm going to have the CEO, Brad Elliott, join me right now, and we're going to talk about some growth strategy. But first, I've got to congratulate you. You founded this company in 2002. You must be very happy right now.
It's an exciting day for us. We've worked on this, building a foundation that will be sustainable for a long time. So this is part of our strategy, and we are very excited.
And speaking of your strategy, I see that your growth includes organic growth and strategic acquisitions. Why is now the right time for this roll-up strategy?
We believe it's the right time because there are a lot of community banks in our marketplace that, with the age of ownership or age of management, they need a partner to help them execute on a liquidity event, and we think that we're organically growing in our markets and have always organically grown, but we also think that there's a lot of growth opportunities in acquisitions. We've done 8 acquisitions over the last 10 years.
Well, given your track record, profitable 9 out of the last 10 years. Now, we saw the financial sector taking a beating last week because everyone's trying to read the tea leaves on the Fed rate hike. What implications do you see on your acquisition strategy if there is a rate hike?
I don't think it changes the acquisition strategy, as it's not driven by profitability of the companies. They're actually profitable and stable. It has more to do with how are they going to execute it for the next 10 to 15 years with the age of ownership and management.
Now, it looks like your loan portfolio is skewed more toward the commercial mix rather than consumer loans. Tell us the reasoning behind that.
We think it's a more profitable sector. We think that as we're growing that sector, their relationship instead of price-driven customers. And so as we've gone after those customers over the years, we've been able to attract people to us that want to bank with us and bank with our bankers because we understand their business. We're entrepreneurs and they're entrepreneurs. So it's just the right fit for who we are and what they are.
So speaking of understanding the business, you're based in Kansas. Tell us about the strengths of the region that you're developing.
It's been very economically stable during the last crisis. We don't swing with the coast. We don't have a lot of upswing and we don't have a lot of downswing in property values. We've had good job growth during this time, and it's very diverse. We have aircraft manufacturer, we have a lot of distribution companies, we have a lot of franchisees that are based in our marketplace, and just core manufacturing businesses. We make real things in our marketplace that are delivered across the United States, and so it's been a great place to be a banker.
So is there anything I haven't asked you that you would want your consumers or investors to know?
I think we're a base hit company. I think we do things right every day. I think we work as hard as we possibly can and probably outwork our competition. And we have just a great group of employees that have made this foundation of the company, and our directors and shareholders have always been there for us during this growth process.
All right, well, thank you so much for making the time to be with us today on this very big milestone day for you guys.
Thank you, Patricia.
Up next, a very cool story. We are talking small cap and robots, how robotics are moving more into our daily lives, and more importantly, how investors can get in on this new technology. That story when Small Cap Nation heads to Silicon Valley. We'll be right back.
Guys, I got the jerseys. El Nino.
Aquí.
Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So Hat-Trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up their number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight.
Can't stop me now.
Come on, Serena.
Can't stop me now. You don't want me. You can't mess with this.
Back to the top. Here we go.
You don't want me.
4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're going to stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
We're heading into the holiday season, and that means big retail bucks. Here in the U.S., Black Friday and the run-up to year-end bring shoppers into stores. Retail outlets hire seasonal workers to keep up with demand. Now, could these holiday helpers soon be replaced by robots? What's brewing over in Silicon Valley today?
Hi Jane, Simbi Robotics introduced Tally, a robot that helps retail stores keep track of inventory. The solution is an auditing and analytics one that can scan a small grocery or retail store in about 30 to 40 minutes. That means that it has the ability to scan products at a rate far greater than a human employee. The 38-inch tall robot is programmed to navigate a store while taking photos of shelves. These are then uploaded to the cloud and compared against a representation of the store to see if products are where they should be, and also to confirm pricing. Now, computer vision algorithms can analyze what is out of stock, which products are facing the wrong way, and what is misplaced. Lastly, a store manager then receives a report. Now, keep in mind the human element. A retail employee has to guide Tally through the store to help it build a map for the robot. Alternatively, a store could send its floor plan to Simbi Robotics. Now, Tally has a range of sensors so that it won't crash and tumble.
The field of robotics has been growing at a rapid pace. What do recent advancements mean for consumers and for the marketplace?
Well, mankind probably won't be taken over by robots anytime soon, but we're finally starting to see a convergence within the industry of advanced electronic equipment and, more importantly, in robotics. We can expect to see functional robots that can perform manual tasks with minimal supervision. So keep an eye on the technologies in the sector along with its applications. There are ways to get into the space without having to focus solely on robotics. Now, the technologies behind automation will continue to pop up in our daily lives.
So what about the small cap space? What companies in robotics should we be paying attention to?
The short answer is Google, iRobot, and even Intuitive Surgical. Most of us have heard of Google by now. And Alphabet's robotics arm has been boosted by its many acquisitions. As the company continues to make strides with its wealth of knowledge from its buyouts, the technology will only be improved upon, and the parent company is not short of cash. Separately, iRobot Corporation has a market cap of over $900 million and trades on the NASDAQ under ticker symbol IRBT. Now, here's a company that has two separate business segments, the home robots business and the defense and security robots business. The company's brands include iRobot, Roomba, Northstar, and a host of other names. The company's defense and security robots business offers products to the Department of Defense and to other international organizations. And Intuitive Surgical specializes in the area of robotic surgery. Its FDA-approved Da Vinci robot systems has not been without its struggles, though, since the expensive systems equal long sales cycles. But it's working on another prototype called Da Vinci SP, but this may be a long-term investment even with the company's cash flow.
A big IPO for the budget airline of India. Plus, we take a look at the European markets. We head to Paris next when Small Cap Nation returns.
Good. Very good. You see something moving off the shelves, and your first thought is to investigate the company. You are Type E. Yes, investment opportunities can be anywhere. Or not. But you know the difference.
E-Trade's barcode scanner. Shorten the distance between intuition and action. E-Trade. Opportunity is...
Before they sat down, one more time, just for themselves. Before the last grandchild graced the stage. Before Katie and her husband hit that rough patch. Before Kevin finally came home and the first grandchild arrived. Before the sons-in-law, daughters-in-law, and Brad's brief brush with the law. Before the second British invasion. Before Katie, Debbie, Kevin, and Brad. Before they became a family. There was a connection that started it all and made the future the wonderful thing it turned out to be. We know we're not the center of your life, but we'll do our best to help you connect to what is.
Sometimes the present looked bright, sometimes romantic. There were tears in my eyes, and tears in my eyes. And so many little things that we learned were really the biggest things. To through it all, we saved and had a retirement plan, and someone who listened and helped us along the way. Because we always knew that someday the future would be the present.
Every someday needs a plan. Talk with us about your retirement today.
Graham, how have the European markets been behaving today?
Well, the European markets are all in the green and have been rising slowly but a little bit steadily. Some good corporate news is driving that, and I think the belief that the Chinese market economics have finally stabilized at this lower level of growth. We have the Bank of England's quarterly inflation report tomorrow. No real surprises expected in either any of the rates or even the QE amounts, but of course they will be hanging on the words of the governor to see whether he's changed his mind about when the next rate rise might be, end of 16 into 17, etc. Also, we have the ECB president, Mario Draghi, speaking this evening in Brussels. So again, people will be hanging on his every word, hoping for clues. And then there are some European economists now questioning whether there needs to be any additional quantitative easing beyond the current programme. And finally, on the political front, more problems for Brussels. Portuguese centre-right, pro-EU austerity carrying out government fell yesterday. They had won, or not quite won, the recent election, and it was widely expected they were going to form a government, but they were knocked out yesterday evening with a no confidence vote. And it looks like the new government's going to be a coalition among the left-leaning Triple Left Alliance, which includes the Socialists, the Left Bloc, and the Communist Party. Yes, there are still active communist parties in Europe, so go believe that. So generally anti-austerity and certainly far less pro-EU consolidation. So you can expect some issues out of Portugal, and of course, being the left wing, it is usually fairly argumentative among itself, and never mind the rest of the world. And finally, today, of course, is Remembrance Day, Armistice Day, Veterans Day, call it what you will. So spare a thought for your country's veterans, particularly those who came home damaged.
Well, Graham, what are you looking at today?
Well, just an aside, an interesting IPO, a delight for those on the IPO scene, 6 times oversubscribed in India. The budget airline Indigo raised $462 million in its IPO. Others should be so lucky. We have what will be an interesting test of the European IPO market. Tomorrow was what is claimed to be Europe's largest asset manager, Amundi, is scheduled to be floated via IPO in Paris.
Do we know why this is being floated now?
Yes, the company Amundi has outlined its plans to raise money for one of its major shareholders, Société Générale, via the IPO. So Amundi was created from the merger of the asset management operations of 2 French banks, Crédit Agricole and Société Générale, in 2010. The IPO could value the company at more than 7 billion euros, according to analysts. But the primary purpose of the IPO appears to be to provide liquidity to Société Générale, which could sell up to its entire 20% stake, whilst Crédit Agricole, which holds the remaining 80% of the business, may be selling up to 5%, although it says it tends to retain a majority stake in the asset manager, which plays a role in its development strategy. Amundi operations accounted for about 12% of Crédit Agricole's net income in the first half of this year. For Amundi, the IPO will change nothing from the point of view of its strategy, but will give it more financial flexibility and will strengthen our reputation, Amundi's CEO said. Amundi says it targets increasing its asset under management by 120 billion euros in 2016 to 18 from a current 954 billion by the end of June this year. It expects, it says, French equity markets to rise 2% annually on average over the next 3 years. The CEO said Amundi's financial structure was solid and its capital buffer stood at 3.1 billion euros at the end of June, which is sufficient to withstand any tighter regulation of the sector if needed. So this is primarily a fundraising exercise to Société Générale. Remember that the ECB has been stress testing the banks recently, and SocGen, who had some good results announced recently, has said the cash will help it get up from on its core equity tier 1 ratio by 20 basis points. So there we are. So that's it from Graham Brown for Small Cap Nation Europe for today.
More trouble for Horizon Pharma. What it means for investors when Small Cap Nation returns.
Everyone works hard for a reason. Working together, we can help you prepare financially for when 2 becomes 3. Wells Fargo. Together we'll go far.
You want to be the best investor you can be. You want to cut through the noise of an overwhelming amount of analysis. You want the insights that will help you decide which ideas to execute and which to leave behind. You want your trades executed in 1 second or less, guaranteed and routed with institutional quality technology. Look no further. Open an account and find more of the expertise you need to be a better investor.
When I got the phone call that we had received the grant, I held my breath.
To have a program like this is a big reward.
Being a Chase Mission Main Street grant recipient is a game changer.
One of the biggest surprises in starting a small business is the number of hours we should work for the first 20 years.
One of the great things about this grant is that it is going to let us invest in some additional inventories.
It's going to allow this business to go to the next level.
Being a recipient of this grant, we can't be thankful enough.
It's a dream come true, and I'm still in awe.
Tensions continue to mount in the pharma space. Shares of Horizon Pharma seeing red, and the battle is heating up between pharmaceutical manufacturers and the companies that dispense their drugs. What's behind Horizon's tumble?
Horizon is down over 15% in midweek trade. This comes after Express Scripts announced that it's cutting ties with a pharmacy that sold drugs made by Horizon Pharma. Now, Express Scripts is a multi-billion-dollar pharmacy benefit manager and is also the largest in the country. Horizon is also a large name with a market cap of over $3 billion. Now, to make matters worse, Express Scripts is suing to recover $140 million, alleging that the drug manufacturer refused to honor certain contractual obligations as part of a rebate agreement. For its part, Horizon rejected the allegation that Linden Care was a captive pharmacy and said that less than 5% of its net sales are from prescriptions that are filled by Linden Care and processed by Express Scripts. Meanwhile, Horizon has asked a New York federal court to block Express Scripts' latest move as it believes the allegations are without merit.
Is the battle between pharmacy benefit managers, or PBMs, and the drug makers likely to continue?
Most likely, Jane, the issue here is a tricky one, but it all boils down to money. The problem for independent pharmacies is the fact that reimbursements can't keep up with price hikes, so pharmacies can lose money simply by filling prescriptions. PBMs are middlemen who tend to influence what drugs you get, where you get them, and at what price. The managers extract discounts from drug makers on medications and also contract with pharmacies. In the past, PBMs reimbursed drugstores mostly in line with market expectations, but in the past 2 years, generic drug prices have skyrocketed on average by 40%, and that means the price tag can go up by a triple-digit percentage point, if not more. But the reimbursement to the pharmacies tend to stay the same for months. Chain pharmacies, the CVS and Walgreens of the market, sometimes lose money by filling generic prescriptions, but they have more revenue and profit than the independents, as well as other business lines, to cushion that blow. So it is hard for small pharmacies to demand more money from the PBMs, and making the situation worse, independent pharmacies are in trouble because PBMs have been slashing the number of approved pharmacies.
So what does all this mean for the smaller pharma names?
Well, that's an interesting question. When you look at the drug retail space, most of the names are multi-billion-dollar companies. Given the fact that PBMs are most often a third-party administrator of prescription drug programs, they're mostly responsible for processing as well as paying prescription drug claims. The debate over drug pricing will continue, and so will the one on distribution. Now, recently, Valiant Pharmaceuticals severed ties with Philidor, another specialty pharmacy. Of course, when it comes to the small cap names, it does boil down to creating effective products and results. So regardless of what we're seeing in the broader market, the future of pharma names will rest on product line, as well as its pipeline, and of course, regulatory approval.
What to buy, sell, or hold, our daily rundown on what's hot and what's not. You're watching Small Cap Nation, the leader in small cap market coverage.
Guys, I got the jerseys. El Nino. Aquí. Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So Hat-Trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up your number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight.
Can't stop me now.
Come on, Serena.
Can't stop me now. You don't want me. You can't mess with this.
Back to the top. Here we go. 2, 3, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're gonna stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
In buy-sell-hold action today, Sabra Healthcare was downgraded by SunTrust Robinson Humphrey. Amidicis was downgraded by Mizuho to neutral. Etsy was upgraded to neutral by Moness. Brunswick was rated a buy at Stern AG. Carriage Services rated a new outperform at Oppenheimer. Pim Virginia was cut to hold at Canaccord Genuity. Public Storage rated new underweight at BB&T Capital. Service Corp was rated new outperform at Oppenheimer, and Sovereign Self Storage rated a new buy at BB&T Capital. Thanks for joining us for Small Cap Nation, and we'll see you back here tomorrow. Until then, check back for the latest news and research on smallcapnation.com, Facebook, and Twitter.